Well, data released in the first quarter of 2018 shows positive signs of growth for both local and global economies. Joining us for that and more is Global Head of Currency Strategy and Market Research at FXTM. That's Jameel Ahmad. Thank you so much, Jameel, for your time today. I think let's start with global markets very quickly. What's the mood at the moment?
Thank you very much. So in the global markets, we actually see quite a lot of optimism, just like you highlighted. We've got more optimism over global growth than we've had since before the great financial crisis of 2007. So there is some optimism out there, but of course we've also got this unpredictable news flow when it comes to political risk, and particularly from the US administration, whether it's US and Russia relations, US and Iran relations that we need to pay attention to for the next couple of weeks. You've got US and North Korea tensions, which again will come into the headlines in a couple of weeks. And you've got this ongoing negative tone between the US and China over trade and trade wars. So there's definitely a lot to monitor. But when it comes to actual economic data and optimism, we're positive.
Let's talk about the impact that all out of that geopolitical tension, particularly when it comes to massive economies like the United States and China. We always, they always say when the US sneezes, emerging markets catch the flu. Where are we in terms of those tensions?
Well, although South Africa might appear very isolated in terms of geographical distance, and if you look on the map between the US and China or the US and Russia or whoever it is in these current headlines, you can never underestimate the impact this can have on market sentiment. Because if there's uncertainty in the market, and the South African rand happens to be an emerging market, and it's also an emerging market currency as well, the rand, if there is any impact to risk sentiment and investor appetite towards taking on risk, there is a negative connotation that this can have on the South African rand. So if we see a negative day in the stock markets, where the US stock markets, whether it's the Dow Jones or the S&P 500s, if it takes a nosedive, it's likely that in the case of what you said, the South African rand will catch the cold as well.
Let's talk about the rand itself. Since the ANC conference in December and then the subsequent swearing in of President Cyril Ramaphosa, there's been lots of upbeatness in the market, in the currency market. We've also seen that filter through to equities as well. Is the mood still positive towards the change in guard in South Africa?
I would say so. You've obviously got a lot more optimism on the ground. Look, this is my third visit to South Africa, and FXTM always love coming here as well. And I see this positive tone now, and I could notice it as soon as I arrive at the airport. So you could say there's optimism in the market, optimism on the ground. Economic data seems to be getting somewhat better as well. Obviously, you saw that move in the currency late December, early January, where the rand moved to its highest levels since late 2014, early 2015. There was a couple of different factors that manipulated and encouraged this move. You had this new political change that helped sentiment. We had the dollar hit its lowest level since 2014, which helped the South African rand as well. And we had a lot of risk appetite in the global markets, where a lot of US stock markets and major equity markets were hitting record highs, which meant more risk was in the market, and there was more appetite towards emerging market currency. So there's a couple of different factors, but there's definitely room to be positive and encourage that the local economy is going to be doing well as well.
And talking about that, both the IMF and the World Bank revised their growth outlooks for South Africa upwards, but with the caveat that we're going to have to deal with some structural issues if we're going to attract investment.
Exactly. Look, the South African economy and South Africa itself still has so much fantastic potential. And in some ways, it's still untouched potential. But what those outsiders still believe that South Africa can do more in is structural and fiscal reforms, whether that's changes of central bank policy or changes to the labour environment or changes towards encouraging more employment. This is what those watchdogs such as the IMF, the World Bank would like to see in order for more positive change to be felt on the South African economy. Of course, such changes will probably be more of an improvement in the domestic economy. But when it comes to the market sentiment as well, we're more focused on the global factors, so US tensions, US relations, trade war. Those are the specific headlines I would watch for when it comes to the South African rand.
What about oil? Multi-year highs.
This is an amazing headline. It's very positive news for any oil exporter. It's positive for emerging markets as well to most degrees, because it means more risk. However, with this oil move, it's happening quite fast. So we have to question whether it's sustainable. Obviously, $80 oil is very good on headline. And we also need to factor in what this does to inflation. Because all of a sudden, oil will start getting more expensive, which means the price of oil is going to start getting more expensive at the petrol pumps. So what will this possibly do to disposable income, to those economies that maybe weren't quite preparing for such a rebound in the price of oil? And what might this do to central bank expectations as well? And the South African Reserve Bank is an example of this. We saw that inflation expectations were getting lower. It provided some scope for the South African Reserve Bank to cut interest rates. Now that this move on oil has happened, we don't know what will happen to inflation expectations because, of course, after any price movement, it always takes quite some time for it to have an impact on the data and the local economy.
Well, we'll leave it there. Thanks for your time today, Global Head of Currency Strategy and Market Research at FXTM. That's Jameel Ahmad.